Yes, my people, what's good? It's Toki Banks, baby. Welcome back to my channel. Today, I want to talk about the only candle pattern that you really need to know when it comes to your trading, okay? Now, as you can see, there's so many candle patterns, right? We've got bullish, we've got neutral, we've got bearish ones, and really and truly, candlesticks is a language. When it comes to trading, understanding how the markets work and what it's illustrating to you as a trader, it's like learning a new language. So all of these candlestick patterns, right, it should come natural to you by understanding what candles are. Let's just go start off simple, right? So as you can see, for increasing stick, the open of a bullish or upwards candlestick, again, it's going to be at the bottom and it will close at the top of the body. This is the body. The wicks are where price went but it never stayed. It went to the low but it never stayed down there. It came back up above the open. And the high, it's gone very high to the peak, but then within the hour or whatever the time frame of the candlestick is, it's going to come down to close at this level. Again, it's showing a story. Same with a downwards candlestick, or other known as a bearish candlestick. Again, highs and highs are always going to be the same regardless if you're up or down. And then lows will also be the same as well. Again, what changes is it opens at the top because it's going downwards and then it closes down, okay? Now, let me draw a candle. So therefore, if we got a candlestick like this now, we know that it opened down here and then it closed up here. So this candlestick, maybe over the 1 hour time frame, represents that price came down, pushed all the way up, and then we came back down and closed down here. That is how this candlestick formed. So what that shows to me is that the buyers initially had control over the hour and then sellers came into control and pushed price downwards. Okay, let's try find an example of this on the chart. There's a downwards one here, as you can see here. Price initially went up, and then it closed below where it opened, and then price continued downwards for the rest of that evening. These things, you should understand it just by looking at the chart. You shouldn't have to look at these candlestick patterns to like understand that. But anyways, let's look at them. They've got hammers, inverted hammers, dragonfly dojis, spin tops. Again, these things, personally for me, your strategy should be able to tell you whether price is bullish or not. Looking at price reacting to levels, what you want to understand is you want to look for your perfect zone, whether that's an order block or whatnot. Order block, impulse candle, any of these situations, even liquidity, right? Let's look at liquidity here. This level of liquidity. We have this candle forming at this level of liquidity. That gives it a higher chance of working. That is a special candle. Why? Because this has a higher chance of working. It's confluence. There's more reason to believe that price will go downwards. Remember, as a trader, you are a detective. You are here to investigate the crime scene, understand what candles are here or forming that can predict where price will go. As a detective, if you come to a crime scene and there's only one clue, would you arrest them? No, because you do have probable cause. You want multiple reasons why, and you want to combine this with all your confluences. Again, double candle patterns. Now, the one pattern that I really want you guys to take in, right, is simply bullish and bearish engulfing. So it's this one here, as you can see. Triple candle patterns, morning doji start, again, 3 white soldiers. I mean, look, it's bullishness. I don't think you need to know what 3 white soldiers is. It's just here. I can notice that straight away. Okay, cool, price is going up. Price is very bullish, yes. But again, when you understand fair value gaps, you know that price always has to come back to, fill in the discount areas that it hasn't touched. A bullish abandoned baby. Yeah, when there's a lot of slippage, yeah, that can happen. A morning star, like the gaps rising free. Yeah, sometimes I see this as price is getting like a breather. Price is pushed up, settling for a bit, and pushed up again. The main one I want you guys to look at is bullish engulfing, bearish engulfing. Yeah, we didn't go into that now. Neutral, doji, spinning tops. Yeah, again, a doji, bro. That just shows you nothing's happened. Look at it, nothing's happened. Nothing's happened within whatever time frame you're on. Nothing's happened within that time frame. The higher the time frame, the more importance and significance I give to the candlestick. Now, let's go to the bullish engulfing. What do you want to see in the bullish engulfing or bearish engulfing? Here we have the candle, as you can see. Now, the previous candle has been eaten. Okay, imagine this big candle so greedy, it's ate and it's violated and it's devoured whatever the previous candle's done. The previous set of candles and its family. So there was 2 downwards candles, as you can see. Oh no, not 2, 1. So therefore, price has gone to close well above it where it opened. It opened here and it's closed well above it. So this level is a level of importance, okay? Let's look for the next version. Cool, here's another one. Here. Again, price devoured its whole family. There was 2 downwards candles and it's devoured it. So therefore, this is the level. Also, some people also call this an order block. You know, if you know about your ICT, this is an order block. So again, it mixes in. This is why I say this is the only candlestick pattern that I feel like you should take down, because you can learn a lot from this. Let me show you another one here. So again, this candlestick devoured the whole family. There was 3 downwards candles. It closed above every single one of them. So therefore, the initial candle, where it opened, we draw a line. And look, when price comes to retest this line, we push up. So again, you can then have your entry here. Obviously, again, you have to backtest this, but again, below the lows. In this perfect example, you can see that this low is taken. So you do want to give your trade room. As you can see, this is 3.6 pips. Ideally, you're going to want 5 pips minimum, really. And then, there you go. Price pushes up. But anyways, let's go on. Let's look for some more. Now, with this one, price didn't close above this high. It did close above the body, though. But again, it does have a bit less significance. Let's look for some more here. So price closed and devoured it. As you can see, it's a bearish engulfing. It closed beneath it and whatnot. Now when price came to this level, we held for a bit, for like 1 hour, and then we pushed right through. We violated. So that didn't really hold. This one, again, we closed below the open of the body, but we didn't close below the low. So you can say less significance, but price reacted perfectly and dropped down. Again, here we close below the body, and even, yeah, that is below the low of the wick. Yeah, so that's valid. And yeah, you can look for sells. Bearish engulfing. When one candle has the audacity to be able to devour the previous, there's a lot of significance. That means a lot of orders have been put through. So when price comes to retest that area, hawk it. Hawk that area with pristine precision, okay? Have your entries around that area, and I'm pretty sure you'll see some wins. Let's look at the next one. As you can see here, we devoured the previous one, but we didn't devour it all. It still did work though, as you can see. We devoured the previous one, price came back to test it, below the low, nice trade. I personally wouldn't take it, but so yeah, this is something you should really backtest. And again, I'm offering free one-to-one lessons where I'm teaching all sorts of strategies and confluences that you can learn when it comes to trading, right? So again, if you're interested, click the link in the description below, drop me a DM, and let's get it. I'm here to talk to you all. I want to get to know my audience. Now looking at this, again, price devoured the previous candle, price came in to retest it, we pushed up. Looking for some more, devoured this one. Again, price is respecting. Let's look for one that's failed. Here, again, this one is not good. Also, look at the candle that's also devouring it. Look at this candle, it's closed close to its high. That means for that whole hour, it's been bullish. It's been always wanting to go higher. So therefore, when price comes to this level, there's a higher chance. Looking at this one, again, price didn't, look how much space. Half of the candle's a wick. So yeah, cool, price did respect it for an hour, but then, as you can see, we went the other way. Let's look for some more. There it is here. We never reached this level, okay. But as you draw across, one thing I will also say, timing is key. The more potent ones are ones that react straight away. They get mitigated straight away. Price comes back to touch these zones relatively soon. Now, as you see, this was the 21st of July, 2025. This is now the 23rd. So after 2 days, yeah, you can imagine that this zone may not be as powerful. Watch out. As you can see, as close as possible, it seems to work. Downwards one here. Price reacted and we pushed down. This one got violated straight. At 3 PM, maybe there might have been some news, price was violated right for it. Used it as a level of support and pushed upwards. A little one here. Again, we didn't devour the whole family. We only devoured the previous one. Price pushed down. Devoured the whole family, price violated and pushed right through it. Didn't work there. Here is a perfect one. You know, price devoured and it closed close to its high, and literally over the weekend, price came back and retested it. And then levels of liquidity have been taken here. Impulse candles here. Again, there's 3 confluences here already. And then even if you're not sure about that one, then you wait for this one and then you enter. And that's your trade. Stop below the low. Target this level of liquidity or that level or that level. You know, it's really up to you. It's really up to you. So that can be done. I can do this all day. All day. Here's one here. Devoured. Price came and retested and dropped down. Another one. Devoured. Price held and respected. This one, the body, it broke, but not the whole family or the wick. And you can see it respected for an hour and then broke through. So that didn't hold. This one held. This candle closed close to its low, So it's a bearish engulfing. It ate the previous candle. It disregarded everything that it's done for the past hour and said, nope, we're going downwards. And as you can see, price broke below, respected. You have your short here. You cover the high, and then boom, there you go. 8R. If you target level liquidity, 6R. So again, this is one thing I want you guys to take away, you know. Research, back test it. This one didn't work. Remember, risk to reward. You want to go for a high risk to reward so then it can make sense. So that's what I would say. If there's any help you guys want, make sure you drop me a DM. Guys, we're here to make it. Let's get it. And guys, by the way, I'm not saying you need to change your whole strategy to fit this. Add it as a confluence. Just research it, back test it, see if it works. I tried this on Euro GBP. Try it on all the other pairs, you know, GU, EU, gold. I know a lot of you trade gold. I don't know why I use Euro GBP as an example, but let's double check before I go. Let's see if it works. Let's just show you on gold before I go. There's one here. Price devoured. We're coming back. Boom. Price devoured. Coming back. Boom. Didn't work here. When this is unmitigated, it worked here. Price dropped and then eventually came back. And obviously this little one here has worked. Price never came back. Price never came back. This one didn't work. This one, it worked. It worked. Price devoured. It went down and then we came back up. Depends where, if your SL was, if your SL was a high, you would have been calm. It didn't work here. Price just violated. There's actually a small one here. Price held for a little bit. Pushed up, but it didn't hold for too long. This one did alright. Price devoured it. The previous whole family of candles. And it held a little bit and it pushed back up. And then it stopped at this impulse candle. So this could be a zone to go for longs. We devoured this one. We closed above, bullish engulfing, but we didn't close above the high. But still, price came back to retest it at 1 AM, pushed up. Price held for a few hours and then eventually just broke through. This one held perfectly. So you go long here, stops below the low. That's 1 to 2, depending on where you want to aim for. Maybe this high, maybe that high. 1 to 1.85. There's one here. Again, as you can see, it held for a bit, but as you can see, this is 18th of July. This is 25th. That's a whole week. The chance of it holding is not the best, but it did hold for a bit. But it pushed up and then it pushed back into this one which was being respected and pushed down. So ping pong, ping pong, ping pong. But yeah, it works on all pairs. So guys, check it out. Seriously, lines. You can make a lot of money off just trading lines. Okay, so let's get it. It's Pokey Banks, baby.